Good day, investors. In this video, we're taking a closer look at Lumentum, ticker symbol LITE. Lumentum just delivered a massive quarter. Revenue up 90% year over year, margins expanding rapidly, and guidance pointing to even more upside. And it looks like the growth story here is just getting started. So in this video, we'll break down the latest earnings results and key fundamentals. Then we'll take a look at the valuation. And finally, I'll give you my personal take on whether Lumentum stock is a buying opportunity right now. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. Now let's start with the highlights. The biggest takeaway this quarter is that AI and cloud demand are clearly driving the business. Lumentum delivered over 90% revenue growth year over year, and at the same time, operating margins expanded significantly. So this is not just top-line growth, this is strong operating leverage coming through. Now looking at the component segment, revenue grew both sequentially and year over year, with strong demand in EML and data center interconnect components. And we're also seeing momentum in next-gen technologies like co-packaged optics and high-power lasers. Then on the systems side, revenue grew over 120% year over year, driven by strong demand for cloud transceivers. And importantly, the company is ramping new products like 1.6T transceivers, while also benefiting from multi-year, multi-billion-dollar agreements. So overall, demand is strong across the board, and the growth story here is clearly being driven by AI infrastructure at scale. Now looking at revenue by product type. Lumentum generated about $808 million in total revenue this quarter, and the majority of that still comes from the component segment, which makes up roughly 2/3 of the business. This includes things like lasers and optical components used in data centers. Then looking at the systems segment, this makes up about 1/3 of revenue, but it's actually growing much faster. Systems revenue more than doubled year over year, driven by strong demand for cloud transceivers and AI-related infrastructure. So the key takeaway here is, components remain the core of the business, but systems are becoming an increasingly important growth driver going forward. Now, after looking at the segment breakdown, let's take a closer look at the overall financial performance. Now, looking at the GAAP results, Lumentum reported revenue of about $808 million this quarter, which is a massive increase compared to last year. But the more important story here is profitability. Gross margins improved significantly, reaching over 44%, and operating income came in at around $174 million, compared to a loss in the same quarter last year. So the company has clearly transitioned from being unprofitable to strongly profitable. And this is really being driven by operating leverage, as higher revenue is flowing through to the bottom line. Now looking at earnings, diluted EPS came in at about $1.50, which is also a big improvement year over year. So overall, this was not just a strong growth quarter, but also a major step forward in profitability. Now moving on to the balance sheet, one of the biggest changes this quarter is the sharp increase in cash. Lumentum now holds over $3.1 billion in cash and short-term investments, up significantly from the previous quarter, which clearly strengthens the company's financial position. Now looking at the broader picture, total assets increased to over $7 billion, and shareholder equity also moved meaningfully higher to around $3 billion. So overall, the balance sheet looks very solid, and this gives the company flexibility to continue investing in growth, especially as AI-driven demand continues to scale. So nothing concerning here, just a much stronger financial position going forward. Now looking ahead, let's take a look at the guidance for next quarter. And this is where things get even more interesting. Lumentum is guiding for revenue between $960 million and $1.01 billion, which implies strong sequential growth from this quarter. So momentum is clearly continuing. Now looking at profitability, operating margins are expected to increase further, into the 35% to 36% range, which shows continued operating leverage as the business scales. And looking at earnings, EPS is expected to come in between $2.85 and $3.05. So overall, management is clearly expecting another strong quarter, with both revenue growth and margin expansion continuing. So after looking at the earnings figures and guidance, let's step back and look at the bigger picture and really understand where this growth is coming from. The key driver here is clearly AI infrastructure investment, because what we're seeing now is a record backlog across multiple product areas. For example, laser chips have a backlog of over 2 years, cloud transceivers and telecom products are over 1 year, and segments like UHP lasers and OCS are on multi-year agreements. So this is not just short-term demand, this is long-term visibility into future revenue. And that's very important, because it shows that hyperscalers are continuing to invest heavily in AI infrastructure, and Lumentum is directly benefiting from that demand, positioning the company as a key supplier in the AI infrastructure build-out. And going a step further, management is now outlining a path toward $2 billion in quarterly revenue and beyond. And what's important here is that this growth is expected to come from multiple areas, including co-packaged optics, cloud transceivers, optical circuit switches, and core components like EML and DCI. So this is not just driven by one product. It's a broad-based expansion across the entire portfolio. And they're also investing in capacity, including a new fab with up to $5 billion in annual run rate potential. So overall, this shows a clear roadmap for scaling the business significantly from current levels, and reinforces the idea that Lumentum is positioning itself for long-term growth in the AI infrastructure cycle. And looking at the demand driven by data centers, we can see that demand for optical components is expected to grow very rapidly. Lumentum is projecting around 85% annual growth in optical lane demand, driven by AI workloads, cloud expansion, and increasing data center complexity. And what's important here, demand is expected to outpace capacity in the near term, which creates a tight supply environment. And that typically supports stronger pricing and margins, indicating there could be even more growth potential ahead for the company. And finally, let's look at Lumentum's market positioning, which really helps tie everything together. The company is operating in a market that's expected to grow very rapidly, with the total addressable market projected to reach over $90 billion by 2030. That implies roughly 40% annual growth across the industry. And what's important here, this growth is coming from multiple areas, including scale-out AI infrastructure, scale-up systems, and optical circuit switching. So again, this is not just one driver. It's a broad-based expansion across the entire optical ecosystem. And Lumentum is positioned across all of these key segments, which puts the company in a strong position to capture that growth and continue benefiting from the AI infrastructure cycle going forward. So after looking at the earnings figures and growth drivers for the company, let's now take a look at the valuation. According to stock analysis data, the stock currently has a consensus buy rating with an average price target of around $707, which actually implies about 29% downside from current levels, with targets ranging from about $145 on the low end to around $1,270 on the high end, indicating potential upside of roughly 28% on the high side. So there's a very wide range of expectations here, and that usually reflects uncertainty around future growth and valuation. Because while the long-term opportunity looks strong, the stock has already moved significantly higher. So overall, analysts still see long-term potential, but in the near term, expectations may already be quite elevated. And when we look at the stock performance, we can get a much better view of the current setup. As you can see here, the stock is currently trading around $990 per share, giving it a market cap of roughly $71 billion. And over the past year, the stock has delivered a massive run-up of over 1,400%, which reflects the strong growth we've been seeing in the business. Now, looking at the valuation metrics, the stock is trading at a high PE ratio of around 298, and even on a forward basis, it remains elevated at around 79. So this is clearly no longer a cheap stock. It's priced as a high-growth AI infrastructure play. The stock is also trading close to its 52-week high, indicating strong momentum in recent months. So overall, the fundamentals are strong, but a lot of that growth story may already be priced in at current levels. So in conclusion, Lumentum continues to deliver very strong growth and momentum. the company is putting up record results, with both revenue and profitability improving significantly. And what really stands out here is the margin expansion, showing strong operating leverage as the business scales. The biggest driver behind all of this is clearly AI infrastructure demand. Lumentum is becoming a key supplier across areas like cloud transceivers, optical circuit switches, co-packaged optics, advanced laser technologies. And importantly, demand continues to outpace supply in certain areas, supporting stronger pricing and improving margins. At the same time, the company is building long-term visibility with backlog and multi-year agreements. So when we bring everything together, Lumentum is a high-growth AI infrastructure company with strong fundamentals and improving profitability. But expectations are rising quickly. So the long-term opportunity looks very compelling, but execution will be key from here. And at current levels, I would look to dollar cost average on pullbacks, because in my opinion, the long-term potential remains very strong, as AI infrastructure demand continues to scale over time. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.